Hello, investors. If you look at political headlines globally, you will find that there's a lot of mess happening out there. You have got wars that are going on, Russia, Ukraine still going on, Gaza, nothing resolved yet. In between, you had a small India Pakistan issue also, and now the whole Iran problem. So, when you look at all these political headlines, you think that, well, the markets can't be doing too well. They are bad news. If you look at the economic side also globally, you have a lot of confusion, lack of clarity with regards to the tariffs. So in all these things, when there's so much uncertainty and people say that markets don't like uncertainties, the markets logically shouldn't be doing well. But when you look at indexes globally, you'll be surprised at how well they are doing. So this month, we are here to explore, number one is this mismatch, and more importantly is the relevance to India and Indian markets, which have been lagging in the short term, and sectors and themes that are emerging from it. So we are taking a great overview of our markets in the backdrop of what is happening globally. So when you look at your screen, the first chart is again something I love to highlight is the All Country World Index. 47 global markets are a part of this. What you see is a 5 to 6 year horizon, the COVID fall on the left, recovered in 2021, 22 was the Russia-Ukraine war, so there was a big global correction. Post that, the markets rallied till about Jan. In Jan, global markets had a very sharp fall, almost about 20%. This was the time of the Trump tantrums, where the fear of massive tariffs were in the offing. But post that, interestingly, in spite of the wars continuing, in spite of the tariff confusion, the global markets have made a new high. And that is absolutely shocking. So this tells us clearly that political narrative is something, but markets are doing something else. The markets have a mind of their own. And as the famous line by George Soros goes, that bull markets are built on walls of worries. There are many worries out there and the bull keeps charging ahead. So you can clearly see that global market index is at a new lifetime high in such times of uncertainty. The next is the major markets of the world, which have been shown here and their performance year to date. That means from Jan. Why I took Jan, this is also the time when Trump got sworn in, and that's when the sharp falls happened. India tends to be a bit in the lagging space. It's right there on the right hand side, somewhere in the mid right hand side at a kind of 6% dollar returns. Even the US has not been doing too great. But in all this, you will find that a lot more markets are massively green. And especially if you look at the left column, you'll find European markets are on a tear. I mean, very large markets like Germany, etc. are up 35% in the last 6 months. I mean, you can add in Italy, you can add in Korea, you can add in Brazil. These are very large markets. So what you realize is that in spite of all this confusion, panic, certain markets or certain spaces, or I would dare say most of the spaces are actually doing very well. So there is a big mismatch. In this, India hasn't come out in flying colors. If you remember, all of last year and the year before that, India used to be on the top left-hand corner. It used to be among the best performing markets globally. So what you can see is the Nifty on a 6-year basis, the COVID fall, recovery in 2021, and a very mild decline in 22. We were in fact the market that fell the least. Very impressive. We were the first to break out. But around September of 2024 at around 26,300, our markets topped out and started falling first. We fell sharply to around 22,000 and we have pulled up with the globe. However, what you will notice is that unlike the previous years where India was the first to break out, India was the market with the maximum returns, we have actually not broken out to lifetime highs. And we are kind of struggling below that. We are finding great difficulty when most global markets have broken out to lifetime highs. This is a point to consider. This is a point to ponder on. That why is India lagging? Number one. And number two is when will India catch up? We belong to the camp that we feel that India is due for a big catch up. There are a couple of factors. Obviously, what is internal is your quarterly numbers. We are coming out of 1 to 2 quarters of very, very slack or disappointing corporate numbers, quarterly numbers. And because of that, the major part of the correction can be attributed to it. The markets had run up, the valuations were rich, and when the companies don't deliver, they do correct. And that's the story of Indian markets. But we feel that the worst is behind us, and now you are going to start seeing upticks. Government expenditure, which was a major driver for our economy in the years that went by, has again revived. And plus other high frequency data tells us that India is improving, it is ticking up, and we feel more optimistic on the domestic number scenarios that is coming. Coupled with the global strength, I feel another big tailwind for India is the fact that the dollar, this is the DXY, has also started correcting sharply. If you notice that FII selling was a major reason for the September onwards fall, we had massive record FII outflows, and that was so linked with the spike in the dollar. The USD, the DXY, went from almost 100 to 110. A 10% move in the dollar is massive, which led to massive outflows out of Indian markets and a lot of other emerging markets. But post that, you will notice that the dollar has corrected. In fact, it's gone below 100 and somewhere around 97. We are very bearish on the dollar. In fact, we think the dollar can actually almost come to 90, the DXY. And this is going to be very, very positive. Of course, there are many other variables in FII flows, but we feel that this is going to be a major tailwind for India. The breakdowns have happened and we feel that a catch-up rally is due. The second asset class which we think is very important for India is crude. It is our largest import bill. In spite of a downward trending market, we had a very big issue between Iran and Israel. This was a reason for crude prices to jump up. But the behavior in that phase clearly showed us that crude, yes, it did have a sentimental bounce, but once the thing got resolved, it again went and made a new low. So crude also we feel was in a downward glide path. It's somewhere around 68 to 70 right now. We feel that Brent would head to almost 50. And that, of course, is a longer term target, but the glide path towards crude is down, and this also helps Indian macros. With those tailwinds in mind, I have a feeling that India will catch up soon. What you see on your screen is the Nifty for the last 1 year. You can clearly see from the September top of 26,300 how we declined, lower tops, lower bottoms, and we made what we call a double bottom. Post that, we have broken out. But remember, we also had an India-Pakistan issue. And that to some extent checked. As global markets kept on pulling higher, we did have a local issue. We had a border problem, and that to some reason also caused volatility. But with the backdrop of improving quarterly numbers, with the dollar being weak, and if crude continues to glide down, I feel that India is due to do a very big catch-up trade. I feel that we will touch not only a lifetime high, but our target is, the next Nifty target is 28,000, which is well above the earlier high of 26,300. India is due for a large catch-up rally. What the triggers are, whether it's the quarterly numbers, improvement of FII flows with a weaker dollar, or maybe a trade deal with the US. We don't know what the variables are, but we get a sense that the markets are due for a very big catch-up. They have underperformed the globe for the last 6 months. They have been volatile and difficult. The time for the trend to play out is coming. So to summarize, there is nothing that has changed. In fact, India looks as good as ever. Politically, things are strong. There is macro stability. If we have a deal on tariffs, that's going to be an added bonus. RBI has been pushing in a lot of liquidity. That exactly is another very, very important thing which we feel will help asset prices. And finally, what I covered earlier was a softer dollar and crude. In this scene, what are the sectors or themes we are betting on? What you see on your monitors is the proprietary industry indexes that we have created. We sort of have created 43 proprietary indexes and we rank them based on performances. We see that the trends that are playing out or the 5 themes that we are focused on, and we think that these can be mega trends going ahead. First is defense. It continues to lead from where it left last year. It is right up there. We also think that the whole capital market story, which is playing through AMCs, brokings, or other intermediaries, continues to remain a longer term theme. We feel stuffs like NBFCs is another very, very interesting area which we prefer relative to banks. The agri theme also is playing out very well. I think fertilizers, agrochemicals, etc. are also playing out very well. Themes that we like are also healthcare. So to sum it up, these are the 5 or 6 themes we are orienting our portfolio to. Yes, the last 6 months have been choppy. Markets have been difficult and you have seen it on the screen. But we think that the time for catch-up, for the trend to play out has come. And these sectors and themes, what we have invested in, are the themes which we feel will lead the bull market to a new high and well beyond that to our ultimate target of 28,000, hopefully by the end of this calendar year. With that note, I leave you for this month and hope the next time we meet, we would have made our journey towards the large catch-up trade which we are anticipating. Thank you very much.